Hello friends, this is Raj Sastry from Raj Option Trading. Today is December 19, 2021. Let's talk about CrowdStrike. CrowdStrike is the undisputed leader in cybersecurity. They can secure your enterprise using their subscription platform, which is completely cloud-based. So as of now, there is a Log4j outbreak and a lot of companies are struggling and CrowdStrike can help with this outage and take it from there. So with that, let's jump in and look at CrowdStrike. And their mission is to stop the breach, and they're doing a good job at it. So as you can see here, if you look at the company overview, look at the major ETFs holding CrowdStrike, look at competitive landscape, review a few charts, do a deep dive, and look at financial summary, stock performance, and let's rank CrowdStrike, Fortinet, Cloudflare, Palo Alto Networks, Zscaler, Rapid, Dynatrace, Radware, CyberArk, QLYS, Sentinel, and TENB, and do a final verdict on who is on top, who is not cutting it. With that, let's jump in and get started. So as we look through here, we got CrowdStrike. Lot of these big ETFs are holding a good position of CrowdStrike. Look here, we got CYBR. It's holding about 296 million shares of CrowdStrike here. And then you got here IGV. They're holding about 109 million shares of CrowdStrike here. So overall, a lot of these ETFs are holding a lot of CrowdStrike stock here. That's why it's one of the core holdings in the security portfolio. You will see CrowdStrike in all the major security ETFs and funds and also technology funds. So with that, let's get started here. So let's look at the cybersecurity landscape and look at few players here and go from there. As we look here, we got CrowdStrike at the top here. Look, stock chart is very nice here. It's lively, goes up and down nicely. And right now it's happened to be at the down here. We are catching CrowdStrike at the right place here. Look at this time on the balance volume is trying to go higher and stock is also trying to go higher. Stock is completely sold off here. And as you look through here, CrowdStrike, it's about $205. Look, there is a nice sales, 1.2 billion shares sales here, and there's a sales growth on an annual basis, quarterly basis, and nice gross margin, 74%. Net margin is negative; they're not making money yet, but overall, it's a good company here. And as of now, for 1 year, they just did 14%. Now they are waking up from this whole big downturn here. I think from here onwards, this company can do well, and these virus outbreaks can really help companies like CrowdStrike to really gain traction here. So it's a great buy at this level here. And then we got Fortinet here. Fortinet is a steady Eddie type stock. It will churn in very good profit and very good investor benefits year in, year out. Look, it's the classic stock chart here, bullish all the way, and even on the balance volume is going higher. So Fortinet is a great stock to buy. I would take this, Fed-related pullback and buy some Fortinet on any downturn. This is going to be a great holding for any core portfolio. And then you got CrowdStrike here, or we call it Net. It's also great stock here right now. Cloudflare. It's going down as you can see here on the balance volume is pretty steady. That tells you a lot of these big players. They're buying Cloudflare here. I love Cloudflare. Look, Cloudflare is at $134 here, and nice sales growth as you can see here. And as you can look through here, they have done about 65% in 1 year. This is also great pick here, nice entry point. We are catching at the right time when the RSI is low. I think from an entry point perspective, both CrowdStrike and Cloudflare are great entry points here and good stock to buy at these levels. And then you got Palo Alto Network here. It's again a great stock. They got a little bit higher debt to equity ratio. They're taking a lot of debt to improve their platform. They want to be one platform for all the cybersecurity needs here. I would be a buyer of this stock also if this stock gets hit during this Fed mandated pullback here. So with that, let's jump in, look at a few more players. We got Zscaler here, again, a upcoming leader. They also have cloud-based security platform. Look, nice on the balance volume, and stock is down with this sector rotation. I would be a buyer of Zscaler into any weakness here. Look, they got nice quarterly growth and yearly sales growth here, and net margin is negative. Company not making money, and little higher debt than I like, but I think it works here. Nice 66% growth in 1 year. I would be a buyer of Zscaler if this pulls back due to this pullback here. And then you got RPD here. It's a $118 stock, as you can see here. This is also pulling back nicely. RSI is 45, great buy at these levels here. Look, RPD has got nice 5-year sales growth, 1 year and quarter over quarter sales growth, and nice gross margin. And net margin is negative, so they're not making money yet. And great 1 year and 5-year performance. It's a good one to buy into any weakness here. And then you got Dynatrace, again one of my favorite here. This also stock is down big time here. Nice entry point here. Look, on the balance volume is trying to go higher. So Dynatrace is also a good stock to buy at these levels. As you look through here, nice 1 year, quarter over quarter sales growth, nice gross margin. Company is making money. It's not a money loser. And look, nice 35% growth or a performance in 1 year. I would be a buyer of Dynatrace also into any weakness here, any severe pullback, and go from there. Then you got Radware here. Radware, I would say, a little high for me right now. RSI 68. Great stock, but it already made its move. I would wait for a pullback here. If the stock pulls back, I would buy some Radware here. So with that, let's look at a few more here. We got CyberArk, one of my favorite stock here. Look, stock has fallen off here, and a nice on the balance volume. RSI is 45. If there is any pullback in this stock, I would buy this. It's a great one. And then you got QLYS, one of my favorite stock here. QLYS is also doing nicely. RSI is 55. If this stock gets hit, it's a great buy. And then you got Sentinel. Sentinel is a good stock, but it's not getting its break here. It's down all the way. This will do very well as we go forward, but right now it's struggling. I would buy Sentinel into this weakness. Understand your time horizon will be a little bit longer for Sentinel, given it's going up and down and struggling a little bit. Look, on the balance one is going higher. If you're a long-term buyer, I would buy some Sentinel at these levels and go from there. And for Sentinel, understand valuation is a little bit high. PS ratio is 76. So there could be some pain ahead, but understand it's a good long-term buy. Valuation is a little higher for this stock here. And then you got TENB here. It's also tenable. It's a good stock. Look, nice 1 year, a quarter over quarter sales growth, nice gross margin. And companies not making money yet. They might make money anytime here. So it's also a good buy here. I would wait for a pullback. Look, stock has gone up pretty nicely here. I would wait for a pullback on this one here and then buy. Not a good entry point right now. If it comes back, I would buy. So with that, let's jump in here and review. I think we already looked at the charts. Let's look at a 5-year chart of CrowdStrike here. As you look through here, whether it's a Fed mandated pullback or not. Look, we had back in 2018 time frame here. I think its stock came down during the interest rate hike back during those days, but it's all back to mirror. Stock did nicely. 2020 was a banner year for CrowdStrike here. Because we had a lot of people working from home. Now we have economy opening up, so stock is struggling a little bit right now. Look, after a big drop here, it's trying to make its move higher. I would be a buyer of CrowdStrike here. The reason I put up this 5-year chart is, this, even though it's a little bit newer company, it was there during 2018 rate hike, and even though it had a little bit drop here, but it kept going in 2020. So I would say overall a good stock. Don't worry too much about interest rate hikes. Those are temporary setbacks. Great companies like CrowdStrike will keep doing great. So with that, a very high level from a platform perspective, they got a great cloud native SaaS platform. Think about subscription revenue year in and year out, and they got nice $1.5 billion annual recurring revenue. I love software companies with recurring revenue. It's very predictable. And they got 94% subscription revenue. That's a great number here. And they got 14,000 subscription customers. Their annual recurring revenue is increasing nicely, 67% growth. And subscription revenue is also growing nicely. And subscription customers are basically buying more and more of their modules here. That's why it's a typical land and expand play. The moment customer buys one module of CrowdStrike, they expand into other modules. That's a great land and expand play here. That's why I like this company. And as you look through here, competitors, they got various types of platform here. Some of them have got on-premise platform, a lot of agents, a lot of miss attacks. So that's why CloudStrike is a nice positioning here. They're a cloud-based platform. They can basically swap out all these legacy competitors and go with their clean cloud-based subscription platform. As you look through here, they also have nice artificial intelligence based platform here. They can understand the threat and they can basically alert. Even in this log4j issue, CrowdStrike was the first one one of the first companies to really expose this vulnerability. That shows the intelligence behind this platform here. And as you can look through here, they got a Falcon platform. It has got various modules. They will start customer in one of these modules and expand. That's the benefit of this platform here. They can really do well. Start small with a small module here and then expand. That will give them the nice annual recurring revenue growth and a subscription revenue growth. And as you look through here, they're doing very nicely. Subscription customers are growing. Look, nice growth here. I love this clip. They're doing really great. 75% year over year growth. That's a good one here. 63 Fortune 100 customers, 234 Fortune 500 customers, and 14 top banks all trust this company. They also have US government, trusting their software. So with that, let's jump in and look at background here. As you look here, CrowdStrike is an endpoint security solution delivered as a platform, and they basically help to get rid of your legacy multiple platform here with their cloud-based platform here. And typical land and expand. You can start with CrowdStrike, one module, and they will help you expand into multiple other modules and provide you one stop solution here. And their product are becoming more and more capable. The more clients they add, their threat intelligence will become more and more savvy, and they can really help to combat any cyber security crime in advance using their intelligence network here. So with that, if you look through the company here, it's a security company, cyber security company, cloud delivered solution. That's the big selling point here. They got about 19 modules here. It's a completely subscription based, completely cloud native. Stock price is around $205, and they have got market cap of about $47 billion here. It's got a lot more growth ahead of it. I think it will do very nicely. Look, stock prices has done nicely in 2020. In 2021, it's struggling. Now with this virus outbreak right now, this stock can go higher. It's a very good entry point here. I would recommend if you already have it or if you don't have CrowdStrike, it's good to look at this and add to your shopping list here. I would say even buy if you can and take it forward. It's a strong buy right now, and we got 14 analysts rating it as a buy. And according to Motley Fool here, it's a monster growth stock here. It's named as a best endpoint security company here. And it's one of the supercharged tech stock to buy. So all these analysts are very much pumped up about this company here. I like this company especially because it's a great company and stock is at the right entry point here. I think it's a good one to buy here. So with that, from a leadership perspective, we got George Kurtz. He's the CEO and co-founder of this company. He knows how to lead the company. He's very vocal, and I think he's doing the right job. Look, CEO rating is 95%. That tells you this guy has got what it takes to lead the company during these difficult times. And he had nice background. He was at McAfee before, and he knows security industry. He can really lead the company here. So with that, as we look through here, let's look at deep dive. So from a snapshot perspective, look, we got a strong buy rating from analysts. Price is around $205 and nice the volume, 5.3 million shares traded. That's a good volume. Average volume is also pretty nice. Right now, volume is more than average volume. That's a good indication here. Stock is going higher with the high volume. That tells you coast is clear. And put call ratio is 0.75. That tells you there are more call option buyers than put option buyers. That's a good story here. Target price is the 297. Current price is 205. Lot of room to run here. And as you look through here, we got sales, nice $1.2 billion sales here. And quarter over quarter sales growth is also nice. As you can see here, year over year sales growth is also great. This company was not there during the previous interest rate hikes because IPO date is 2019. So nice gross margin. I like this. Right now, company does not have profit yet. Profit margin is negative, and net margin is negative. Right now, they're not making money yet. As we look through from a future growth perspective, analysts are expecting nice 55.6% growth from an earnings per share perspective. That's a good one. And also, as we look through here, from a sales growth, analysts are expecting 40% sales growth. So that tells you analysts have got confidence in this company. This can deliver nicely. And from a money flow index perspective, look, stock is sold off here. Nice entry point here. I would say, if the stock gets hit, even otherwise, I would be a buyer of this stock. Add to my core holding of CrowdStrike and beef my position here. And as you look through here, we got a debt to equity ratio 0.80. They don't have too much debt. This is completely okay. And as you look through here, not too much debt, a lot of cash, $1.9 billion cash here. Company is not going to go out of business anytime soon. It's a very solvent company, as you can see here. Free cash flow positive company. And as you look through here, I don't like return on equity and return on investment. I think company has to make some progress because company is not profitable. You see this negative right now. And as you look through here from a return perspective, stock is nicely below its 1 year price here. As you can see here, 31% below 1 year price. And it's trying to improve right now. It's just 2.4% increase in 1 day. And as you look through here, it's just let's see here. I think it's right now it's in a negative territory. It's good from a 1 day, 5 day, 10 day perspective, but 1 month, 3 month, 6 month, all negative as you can see here. For 1 year, it done 14%. For 2 years, a whopping 314%. So it's doing nicely as you can see here. And it's above its 20-day moving average. It's trying to get warmed up and go higher as we speak. And lot of institutions hold this stock here 72%. That's a good story. So with that, overall company doing nicely, even though they don't have profit margin right now. Net margin is negative. Company doing nicely, growing very nicely. So with that, let's jump in and look at few numbers. As we look through here from an earnings per share perspective, look, it's in a positive trajectory here. It was negative 90.96 and now it's a negative 0.42. Overall trend is okay. Not it's a great year. They're trying to make some progress and go towards showing some earnings as we go forward. And as you look through annual sales here, great clip. I love this clip here. Company doing great. That's why I love to see these type of numbers. It will tell you how is the historic movement here. There, as you see here, 2017, 2018, it's nice growth here. This tells you in the future also this company can do well. They can put up nice sales. And then annual shares outstanding, it's decreased a little bit. I can take this, it's not too much. With this annual revenue growth here, little bit increase in outstanding shares is completely okay, not bad. And look, quarterly revenue, nice revenue growth here. Very few companies can put up this revenue growth quarter in and quarter out. CrowdStrike is doing it, so it's a great company. And quarterly R&D, this company has to put money in R&D. That's how they grow their platform and make it sticky. I like the companies investing in their own R&D. And finally, net income. Right now it's negative. They're trying to improve it, as you can see here. I'm sure situation will improve as we go forward. Right now, company not making money. I'm sure they can slowly go towards profitability in a year or two. So with that, from a earnings history perspective, look, they've done great. Stock price was about $89 back in 2019. Now it's $205. Nice increase. Look at the market cap here. It was a $20 billion company around the IPO. Right now it's about $47 billion company. That tells you this company is taking market share away from the competitors and growing nicely. I like this overall trajectory here. That's why I like to see these type of charts. It tells me how the company has done, all the way from IPO days till now. If I see a positive trajectory, that tells me it's a winner. And then we got sales here. Look, nice sales growth. It was 108 while ago in 2019. Now it's 380 million. So it's a nice sales growth here. Look, sales growth is at a nice clip. Even though it dropped off a little bit, from 2018 or 2020, the COVID days, but still nice, respectable quarter over quarter sales growth. I like this number here. Comparison is a little bit tough because they're comparing 1031 here to 1031 over there. So that's why it's comparison is a little bit tough. We are comparing against, COVID days. That's why it's a little bit not great compared to earlier days. But still, I take 63% revenue growth anytime. Earnings per share is improving, as you can see here. That's a good sign. Company is trying to go towards profitability as we speak. And their cash position is improving. I love this. It was 1.7 billion. Now it's 1.9 billion. That's a record cash position here. Great. Debt is controlled. It's very controlled here. They're keeping it constant. Debt to equity is also nice here. Not too bad. And as you look through free cash flow, nice, trending up here. That's good. Operating cash flow is also trending nicely higher. Gross margin is good. I like the two. And right now, company not making money. That's why net margin is negative. But it's improving, as you can see here, from negative 17% to negative 13%. This company is putting money on R&D. They want their platform to be sticky. I like those type of investments that will make it better. And as you look through here from a return on asset and equity perspective, it's improving, but I want this to be double digit positive. It will take a while. And finally, from an earnings per share perspective, the stock is a little bit expensive. It's expected in the cybersecurity industry. I think I'm not too much concerned on the dips. I'll be adding CrowdStrike to my portfolio, and it's already my core holding. So with that, let's jump in here from an earnings history. This company knows how to deliver earnings, quarter in, quarter out, all positive surprises. As you can see here, they always beat on the EPS, earnings per share perspective. They also beat on the revenue perspective. Very steady Eddie company. This is very predictable. Wall Street likes these type of predictable companies. And next, as you can see here, we had few downgrades back in November and September. Now analysts are upgrading the stock here. This can give a nice boost to the stock price. It's at 205 right now. Look, the target is at 255 and 320. That tells you this stock has got a lot more room to run. And if you look through here from a performance perspective, look, 2020 was a banner year, 324%. 2021, they're struggling. Now it's trying to go higher slowly. I think it's the right entry point here. And as you look through the monthly performance here, nice performance, lot of green as you can see here. Anywhere there's a double digit dip, it always came back nicely. Right now, November and December, company is struggling. I think now it's trying to go higher. Good entry point here to buy. And from a weekly perspective, as you see here, we got 3 weeks of negative performance. Now 2 weeks of positive performance. It's warming up here. That's why timing is right to buy CrowdStrike. And our daily performance here, look, we got some negative performance here, probably around the earnings. Now it's stabilizing. I would be a buyer of this stock if there is any downturn or a pullback because of this higher interest rate situation here. And if you look at the stock chart here, we got a 5-year stock chart. Look, stock is down here, trying to make its way higher. This is when you try to buy the stock. You don't want to buy a falling knife. Right now, company is trying to rebound. Good position to buy. And if you look through a shorter term 1-year chart, look, right now it's the RSI is trying to go higher. That's a good sign here. Stock is stabilizing, trying to go higher. DMI perspective, the red line wants to come down. Blue line is thinking where to go. I think the distance between the blue line and the red line is narrowing. That's a sign of a positive divergence here. This can really go higher and be a bullish crossover as we go forward. Look, on the balance volume is going higher. That tells you there are more buyers than sellers. Check-in money flow is also nicely uptrending here. Tells you smart money is buying the stock here. So with that, as you look through the option chain here, there are more call option buyers than sellers. Look, open interest here. You got huge 1.2 thousand shares, about 250 strike price here. Current strike price is 205. That tells you a lot of people are betting stock will go to 250 by April next year. That's a good bet here. And there is also some open position as we see here in put options here, but it's no way close to the open interest in the call option here. That's why it's more bullish. Option traders are betting the stock will go higher. As we look through here, look, we got total call options traded 32,000, total put option traded 23,000. That makes the put call ratio 0.7. Anytime it's below 1, that tells you there are more call option buyers or call option traders than call option put option traders. That's a positive bias. And as you look through here, look, stock price is at 205 here. VWAP is 202. That tells you this can pull a little down. That could be a good entry point here to buy and go from there. And now let's compare my favorite stocks here. CrowdStrike, Fortinet, Cloudflare, Palo Alto Networks, Zscaler, and so on and so forth, and see what's at the top and who's doing great. So with that, as you look through here, we got our favorite companies all doing nicely. And look here, enterprise value is currently lower than the market cap. That tells you these are all if you sell this company here, you'll get 46 million. But I think it's right now it's nicely valued. Market cap is 47, enterprise value is 46. So it's very close to market cap right now. So not a big deal. And from a volume perspective, nice volume. It's about all of them have got nice volume, with the exception of few here. RPD, CyberArk, QLYS, they don't have as much volume, but many of the other stocks are at a million plus volume. That's a good volume, very liquid. And as you look through here, from a fundamentals and recommendation, there's a strong buy rating for CrowdStrike here, and also strong buy rating for Palo Alto, Rapid, and Dynatrace, and CyberArk, as well as TENB. As you look through here, we got a lot of analysts following CrowdStrike here, 48 of them, and Fortinet is a rocket ship here, 49 analysts, and Zscaler nice 48, and so on and so forth. A lot of analysts are covering these stocks. And look here, we got the Fortinet hold rating, probably it's the valuation. The stock has gone up nicely, and Cloudflare also has got a whole lot of hold rating here. And we got few sell ratings as you can scan through here. Target price for all these stocks are much higher than the current stock price. That tells you these stocks have got a lot more room to run. And all these stocks are down nicely from 52-week high. Given there is some sector rotation, Wall Street is a little bit soured on these growth stocks here. That's why I like stocks like CrowdStrike at these levels here, down 31% from 52-week high. Good to buy at these levels here. And same story with the Cloudflare here, down 39%. Also a good entry point. And Sentinel is a long-term good entry point here. So with that, I jump in here and look at the revenue. From a revenue perspective, all these companies got nice revenue. CrowdStrike has got $1.2 billion in revenue. Fortinet is a rocket ship, as you can see here. Palo Alto is doing great. And as you look through here from a quarter over quarter top line growth perspective, CrowdStrike is doing great, 64% top line growth quarter over quarter. That's a great number. And we got Cloudflare also doing great, as you can see here. And then you got other names like Fortinet and Rapid. Zscaler is also doing great, as you can see here. And from a revenue growth perspective, nice revenue growth for Fortinet, Palo Alto, Rapid, and so on and so forth. And nice gross margin. All these companies have got good gross margin here. Software gross margin. Look, CrowdStrike 74%. Look at the TENB here, 81%. Radware and CyberArk 82%. Great gross margin here. You can compete with the software gross margin. And look, there are a few companies profitable here, like Fortinet, Dynatrace, Radware, QLYS. These companies make money at the end of the day, not money losers. And as you look through here from a fundamental perspective, nice operating cash flow in many of these companies with the exception of Sentinel, which is a little bit new player here. Free cash flow perspective, nice free cash flow for CrowdStrike and Fortinet, negative for Cloudflare, and negative for Sentinel. And a lot of cash. These are all cash cows, as you can see here. More than $1 billion in cash. They have what it takes. Even Sentinel has got nice cash. From a debt to equity perspective, most of these are below 1, which is good. But Cloudflare, Palo Alto is the highest debt here. We got to watch this a little carefully here. They took on so much debt to grow the company. And also Zscaler also took some debt, as you can see here. But otherwise, companies don't have too much debt. Oh, even TENB has got good debt here. And from a growth perspective, from the valuation perspective, keep watching the price to sales ratio here. CrowdStrike is a little rich on the valuation here, 36.9 price to sales ratio. That tells you it's a little bit richer, but not as rich as Cloudflare here. And also Zscaler is even richer. For a software and a cybersecurity company, I think 36.9 is okay, even though it's a little richer. But compared to Net and Zscaler and even Sentinel, it's not very expensive. That's one of the reasons I like CrowdStrike here. And as you look through here from price to equity, PE ratio perspective, it's high. At least Fortinet is high, but these companies I would go by price to sales ratio instead of price to earnings ratio. And then you got earnings per share here. There are a few companies which are positive earnings per share, like Fortinet, Dynatrace, Radware, as well as QLYS. Other companies are trying to make it there, not yet profitable. That's why it's a negative earnings per share. And let's look at one more category here. This talks about fundamentals and future growth here. As you look here from a future growth perspective, you got earnings per share growth and revenue growth. All these companies here are doing nicely from an earnings per share growth perspective for next year, with the exception of CyberArk. It's got a negative earnings per share growth here, but otherwise all these stocks are doing nicely. For this year, it's almost over. Some of these companies have got positive earnings per share, and few of them have got negative earnings per share. As we all know, each company can have different fiscal calendar. It may not align with the actual calendar. As you look through here from a earnings per ROE and ROA perspective, Fortinet is great, making money, and a few other companies are also good. But CrowdStrike has to improve and become profitable. Right now, negative ROE and ROA. And as you look through here from a technical analysis perspective, right now, as you look here, look at the money flow index. CrowdStrike is one of the lowest here. That tells you it's completely sold off. Good entry point, along with the Cloudflare very low money flow index here. That's also a good one to buy here. And on the other hand, look, Radware is a little high, Not a good entry point here. And probably 10B, you could wait a little bit, not a good entry point. Let it sell off a little more. The moment it becomes more less than 50, then it could be a good one to buy here. And then you got put call ratio here. Look, Palo Alto network option market is predicting a little bit downturn here. That's why put call ratio is high. There are more put option traders than call option traders. But otherwise, all the other stocks have got low put call ratio. Tells you in the option market, folks are betting the stock will go higher. From a float short perspective, look, there is a little bit high short ratio, float short in Zscaler. Short sellers are breathing down its neck, and the same story the QLYS here as well as Sentinel. And let's look at one more category here. Let's look at the past performance. From a past performance, as you see here, on a 10-year basis, Fortinet has done great. Even 5-year, it's done great. And look, 2-year basis, CrowdStrike has done good, 314%. That's a good growth here. Overall, all these cybersecurity companies have done great in 1 year and 2 years. As you can see here, some of them done great in 5 years. And currently, as you can see here, we got some of these companies like CrowdStrike not doing great in near term here. That's why I like to buy long term winners who are struggling in the short term. That's why stocks like CrowdStrike, Cloudflare, even stocks like Dynatrace and Sentinel could be a good one here. Even though Sentinel is a newer company, could be good to buy at these levels and take it from there. And next is the moving average. I love moving average. That tells me what's going on in a cursory look here. Look, even though CrowdStrike is down below 20, 50, 120, 200-day moving average, is trying to go higher than 10-day moving average. That tells me the company has woken up here. It's trying to go higher. Even though it's below its 200-day moving average, it crossed its 10-day moving average. That's a good sign here. Fortinet is a rocket ship here. It's doing nicely, nice bullish territory here. And Cloudflare is sold off here. I would initiate a small position. Even though valuation is high, I think stocks like Cloudflare will always have high valuation. And Dynatrace is sold off, as you can see here. Could be a good one to buy here. And Sentinel is completely sold off. You could buy some at these levels also. And then we will compare here and rank these stocks and go from there. And look, we got summary here. As you can see here, all these stocks have got nice recommendation, as you can see. And look, from a 1 year, 2 year perspective, return perspective, all these companies have done great, nice performance here. And from a margin perspective, all these companies have got nice software margin about 65, 70, 80%. That's a great margin here. Few companies are not making money right now. CrowdStrike, Cloudflare, Palo Alto, so on and so forth. They're still working on their own platform and not profitable yet. From a money flow index perspective, from an entry point perspective, great entry point for CrowdStrike and Cloudflare, very low here. And I would wait a little bit on Radware and TENB. They would come down a little bit from a money flow index perspective. And from a ranking perspective, from a health perspective, look, we got CrowdStrike B here, and growth is A, and so on and so forth. Let's start looking at the rank here, and we can talk through commentary. Number one, Fortinet rocket ship. As you see here, Fortinet, nice B, nice Altman Z score, tells you financial sound. Nice Piotrowski F score tells you the books are improving, accounts financial position is improving. Nice one grade here or rank here from a growth and profitability and quality. That's why hands down, Fortinet is the winner here. Any pullback due to this growth stock rotation here, out by Fortinet. Great stock, long term, nice positioning. Number two is QLYS. As you look through QLYS here, more green than red here. Nice profit rank, nice quality rank. Also, growth is number two here, and nice financial positioning from a Piotrowski F score perspective. Overall, QLYS gets number two here. Look, from a MFI money flow index perspective, it's 47. That tells you could even buy QLYS here. And number 3 is Dynatrace. As you look through Dynatrace here, DT, look, it's making money, positive net margin. It's not a money loser. And our money flow index is low. That tells you can buy at these levels here. And keep watching Dynatrace, doing nicely, more green here. Number 2 from quality, number 2 rank from a profit perspective, and number 2 from growth. That's a good one here. And number 4 is Radware. Look at Radware right here. Doing great here. Companies has positive net margin. Tells the company is making money here. And look here, nice financial positioning, nice Altman Z score as well as Piotrowski F score. And growth is C, but it's manageable here. And nice industry growth and industry profit rank is also good. That's why Radware gets a 4 here. Keep watching Radware. It's also sold off here. It's a good entry point here. And number 5 is CyberArk. Keep watching CyberArk, right? CYBR right here. It's a negative net margin right now. And as you can see here, money flow index is 42. Tells you stock is sold off here. And keep watching nice B grade from a financial health perspective. Nice Altman Z score. Industry growth rank is 7, which is I want this to be a little bit higher, but doing good from a quality and profit perspective. And number 6 is CrowdStrike, the company that we are talking about today. I think it's a good one to buy given it's sold off here. If it comes down any further, I would be a buyer. Right now, company not making money, net margin negative. Money flow index is 18, tells you stock is sold off here. And look, nice financial health, nice book, Piotrowski F score here, and growth is A. It's growing company even though financials are not great here, with the net margin negative. It's a growth company. Growth wise it's A. So if you're a young investor or a young at heart, you could buy some CrowdStrike. It will grow nicely. And number 7 is Cloudflare or Net. Keep watching here. Right now, company not making money, negative net margin, but nice gross margin. That's good here. And as you see here, it's in nice financial positioning here, and it's got nice score from a Altman Z and Piotrowski. And right now, industry rank perspective, it gets a 6 here, which is below average. That's why it's number 7 here. I would be a buyer, in this pullback and take it from there. And number 8 is Zscaler. As you look through Zscaler here, look from a valuation perspective. This company has got a little bit higher valuation from a price to sales perspective. Company not making money. And as you scan through here, a nice financial positioning here. And it gets a F grade in profitability. Number 8 from an industry profit rank and number 7 in the quality rank. That's why Zscaler is 8 here. And number 9 is Palo Alto Network. Look, Palo Alto Network is right here. Company is not making money yet. It's negative 11%. Nice gross margin, as you can see here. Nice returns performance in 1 year and 2 year. And look, from a profitability perspective, F here. Industry rank is 8. I think at this time it's a little high price. Wait for a pullback here. And number 9 is TENB here. Look, TENB, nice. They're not making money yet. Nice gross margin. And right now it's good to wait for a little pullback. Given money flow index is 53. I like to buy when money flow index is below 50. And look, it's got nice positioning, nice C grade when it comes to financial health. Altman Z score is nice. It's not going to go out of business. It has nice financial positioning here and nice growth grade B here. So overall it gets a number 10 here. And number 11 is Rapid RPD. Look, we got RPD. Let's see, RPD. Yeah, looks like yeah, right here RPD. As you look through here, it's got nice gross margin. Company not making money, and right now money flow index is 24. Tells the stock is sold off here, and they got nice B grade in the financials. 2.2 in Altman Z score, which is not bad. Above 1.8 is good, and they got number 2 in the profit rank here, number 7 in the quality rank. That's why they're number 11. And number 12 is Sentinel. One of my favorite stock here. It's not doing great of late, but it's a great long-term play here. Company not making money. Right now it gets a C grade in the financials, And as you scan through here, number 6 below average when it comes to growth and quality. That's why it's number 6. So it's a quick rank for you. If you are waiting for a small pullback here, pull the plug on maybe top 10 stocks here and go from there. Next, let's look at CrowdStrike. We looked at fundamentals, we looked at technicals, we looked at the relative ratings and gradings. As we scan through here, CrowdStrike delivered a robust third quarter growth here, and their ARR, or annual recurring revenue, there is a nice 67% growth, and they surpassed $1.5 billion milestone in revenue. So overall, it's a great company here. They're doing the right thing, and they're adding lot many customers here. 1,600 net new subscription customers. That's a very good growth here. And total revenue 63% increase. That's a great growth here. And subscription revenue up 67%. That's also great. And their gross margin was 76% compared to 77, which is okay, not bad. 1% down, but not bad at all. I take this any time. And they got a lot of cash. They generated 159.1 million compared to 88 million. That's a good jump here. They're doing nicely. And their cash equivalents grew to 1.91 billion. They got a lot of cash. And their subscription customers, they adopted four or more modules. I think they have this land and expand model. They started with one module, they'll grow into other modules. That's how they grow nicely here. So customers are buying more and more modules nicely, as you can see here. And they're a leader in the market scape here in the endpoint security. That's a good accolade. And they beat and raise in the quarterly earnings. So at this time, stock is completely oversold. I recommend slowly accumulating and buying this great company if you don't have it, or even if you have it, just add to your position. This will do nicely. Any downturn because of this interest rate related slowdown, just buy some CrowdStrike and it will do nicely. So with that, thank you very much. Happy investing and trading. Please subscribe.